Yeah, hi everybody. Tom Williams here with Peter Offen and Rita Offen. We're just doing our stock selection. First of all, this is the chart we've got up. It's the S&P 500 cash market. And as you can see, it's not doing a great deal. It seems to be laboring, trying to go up. Of course, we have been overbought. We've seen no real positive indications of a top, although we've seen no demand, of course, and lack of any enthusiasm from the upside. But you just need to be on your toes and watch it, because you can't trust these people. Further you can throw them, I'll tell you that. Because they're there to make money for themselves. They're not interested in you at all. Okay, so put the first stock up, Pete. Yeah, we thought we'd vary it slightly today and show you a weak stock, or a stock that's sending out a warning to you that this is not the sort of stock you want to be tied up in too much. This is normally one of the first signs of weakness you see. And here why? Because it's been marked up, look, heavily. The volume's very high. On that volume it collapsed down well below the middle. Strong stocks do not do that. But a stock's not going to go into a bear market directly from an indication like we could see there. But expect it to oscillate sideways, and then you have to read it as it unfolds. There'll be no demand. There may be further up thrusts on good news and all this type of thing. But that's one of the first signs of weakness you see in these stocks. Next one, Peter.
Next one is AMD.
Now, the reason why we thought we'd warn you about this one is that there's definitely high volume on that up bar, look. It's just produced a signal, admittedly. It's potential buying climax, but whether that's enough volume to warrant that statement, I'm not sure. But there is high volume on the previous bar as well.
That's the same, potential buying climax.
Right, so we've got heavy volume on the upside. And we notice that after that heavy volume, we've suddenly got no demand, look. It goes up, volume is very low, and it closes in the middle. So there's a warning shot for you over your bows that this stock has been acting stronger, but looks now as if suddenly it's hitting supply. That's not good for any long-term investment. We've seen this principle here, though, many times. You've got a red arrow, up thrust, right, and then immediately next bar is the red down bar testing. Look at the low volume. There's no signal on it, but as soon as you see that, you know that market's going to go up. So that's a principle you should bear into your mind. Next speed.
This one now is going to be looking stronger.
Now this one, it looks initially stronger. It's certainly acting stronger as strong as the index. Now this looks like a king size shakeout come test. And you've got something back here which is strong. Right here. We've got a down bar here. We've got an arrow.
It says demand overcoming supply.
Yes. demand overcoming supply, which is right. Okay, that's driving it up. But however, because this old top here, that wants to test it, shake. That's really a test come shakeout. The volume is fairly high, which is a slight concern. But that's the sort of thing that when the market's strong, that could go up very easily.
Hello, it's Peter here. That very first stock we looked at, AIZ, I just want to go back for Tom to answer a question I have. Tom, this stock was one that was picked out, I think it was last week, I'm not sure, or the week before, as being acting as strong as, which it was at the time, as strong as the index. And as it happened, it did go up. So why I'm about to ask the question is sometimes I've made a mistake. I've seen some strength and I've gone in, and then because I was looking at strength and it's gone up, when a sign of weakness comes in, I mean I must admit that's quite obvious, but when a sign of weakness comes in, I'm slightly reluctant because I'm in profit to come out. What would you say if you were long somewhere around here because you saw it looked like quite a good stock, and then you saw that? What would you do at that point with your holding?
Well, in my portfolio, I close that out because you've got so many opportunities. You've got hundreds to pick from, and people don't like leaving a winner. But they've got to realise that winners can become losers, and normally the loser you're forewarned with this type of action we see now. You can follow this through as the days and weeks pass. But it was acting, Peter was quite right, it was acting strong with the index, and we did put it on our strong list. Now we're talking about short-term trading here. Of course, if you want to trade longer term, then you have to use longer time frames, like weekly or even monthly. If you're a fund manager and you were trading a portfolio for a year or something, you'd probably trade off a 1 week, 1 month chart. Because if you look at the 1 month charts, they work very well. Okay.
Okay, thanks Tom for answering that. Okay, so that's it folks. Don't forget all trading is your own responsibility, so do your own checking. We're not making suggestions you buy or sell, and we're saying that purely because the market's a dangerous place and you have to watch out for yourself, and it's all your responsibility because that's just the way it is. So with that we'll say thank you very much and we'll see you next time.